What if I told you that almost every dollar in your bank account doesn't actually exist? That the money you work so hard for, sacrifice weekends for, stress over, it's basically a magic trick, a sleight of hand that's been running for centuries? Sounds crazy, right? But here's the uncomfortable truth that the financial elite doesn't want you to figure out. Banks don't have your money. They never did. They're operating the most successful con in human history, creating money out of literal thin air, and you've been conditioned your entire life to never question it. This isn't conspiracy theory. It's how fractional banking works. And once you see it, you can't unsee it. Most people think banks are these safe, boring institutions that simply store your deposits and maybe lend them out carefully. Wrong. Dead wrong. In the modern economy, banks are money creation machines, typing numbers into computers and, poof, new money exists. No printing press needed, no gold backing, no actual wealth transfer. Just digits on a screen backed by nothing but collective faith in government promises. And this system, this fundamental trick at the heart of our money system, is directly responsible for the inflation eating your purchasing power, the debt crisis crushing entire generations, the wealth gap that keeps expanding no matter how hard you work. Every financial crisis, every market crash, every moment of economic uncertainty traces back to this one mechanism. But here's why you need to pay attention right now. Understanding fractional banking isn't just interesting economics trivia. It's the key to protecting yourself from the economic collapse that this system makes inevitable. Because when you see how central banks and commercial banks work together to create money from nothing, when you understand why perpetual debt and built-in inflation aren't accidents but features, you can finally make financial decisions that put you on the right side of this massive wealth transfer. Stick with me for the next few minutes, and I'll show you exactly how this trick works, why it's more powerful today than ever before, and what you can do about it before the next financial instability wave hits. Ready to see behind the curtain? Let's go. Picture this. Centuries ago, medieval goldsmiths sat in their shops, storing people's gold in secure vaults. Smart folks, those goldsmiths. They noticed something curious. Not everyone came to withdraw their gold at the same time, so they started issuing more receipts than they actually had gold in the vault, lending out claims to gold that didn't exist. It's like selling 10 tickets to a concert venue that only has 5 seats, betting that not everyone will show up at once. And guess what? This little trick became the foundation of our entire modern economy, the bedrock of the money system that controls your purchasing power today. Wild, right? The Sabio Observer sees this for what it truly is, the birth of financial manipulation on a scale most people can't fathom. Those receipts became money, not backed by real gold, but by the promise that if you showed up, maybe, just maybe, there'd be gold there for you. The goldsmiths discovered they could create money out of thin air, as long as confidence held. And here's where it gets interesting. This isn't ancient history. It's exactly how your bank operates right now in the digital economy. That money in your account? It's mostly just numbers on a screen, receipts for wealth that might not exist if everyone tried to claim it simultaneously. This is the original economic system hack, the trick that would eventually lead to every financial crisis, every bank run, every moment of economic uncertainty we've experienced since. The central banks of today are just sophisticated versions of those medieval goldsmiths, operating on the same principle. Create more claims than you have assets, and pray confidence never breaks. When you deposit $1,000, your bank doesn't lock it in a vault. It lends out $900, $950, sometimes more, creating new deposits in the process. The cost of living rises, inflation creeps in, and most people never connect it to this fundamental sleight of hand. But understanding fractional banking is understanding why the wealth gap exists, why economic collapse feels perpetually around the corner, and why the financial elite always seem to stay ahead. And what's fascinating is how this system evolved in our modern world. Here's where things get really mind-bending, and this is the part most people, even educated folks, get completely wrong. They think banks take your deposits and lend them out, right? Nope. In the modern economy, banks don't lend out deposits. They create deposits by making loans. Read that again, because it flips everything you thought you knew upside down. When you walk into a bank and get approved for a $200,000 mortgage, the bank doesn't go to some vault and pull out $200,000 that depositors saved. They literally type numbers into a computer, and boom. New money exists. Your loan creates a deposit out of nothing, expanding the money supply with keystrokes. And get this, since 2020, US banks aren't even required to hold reserves anymore. Zero. Zilch. The monetary policy shifted completely, removing what little constraint existed on this money creation machine. Now, the only real limits are capital requirements and liquidity regulations like the Basel Accords. Basically, rules about how much of the bank's own equity must back its lending, and whether they can survive short-term cash crunches. But these are far less restrictive than the old reserve requirements. The central banks understood something crucial. In the digital economy, reserves weren't constraining lending anyway. Banks were finding workarounds, creating shadow banking systems, developing financial instruments that bypassed old rules. So regulators essentially admitted defeat and changed the game. What this means for you is profound, though hidden finance keeps it obscured from public understanding. Every time a bank makes a loan, for a car, a house, a business expansion, new money enters the economic system. This isn't moving existing money around. It's creation ex nihilo, from nothing. The job market, the stock market bubble, the inflation eating your savings, all connected to this fundamental mechanism. Tech companies borrow billions to fund AI spending and automation. New money created. Government runs a debt crisis. Central banks enable it by allowing commercial banks to create deposits backing government bonds. The global economy runs on this continuous expansion of credit, this perpetual creation of new claims on wealth that may or may not actually exist in real terms. And naturally, this creates some pretty serious problems that most people don't see until it's too late. So what happens when you build an entire economic system on created from nothing money? 3 inevitable consequences emerge, and they're playing out right now in ways that touch your life every single day. First, built-in inflation becomes unavoidable. When banks constantly create new money through lending, each dollar in circulation gets diluted. It's like adding water to wine. The volume increases, but the potency decreases. That's why your cost of living keeps climbing, even when official numbers claim inflation is moderate. The money system itself is inflationary by design, not by accident. Second, perpetual debt becomes the norm. Because all money in this system is created as loans, someone has to borrow it into existence. The total debt always exceeds the total money supply. It's a mathematical impossibility to pay off all debt simultaneously. And third, here's the kicker that explains the wealth gap more than anything else. Interest flows upward to the lenders, concentrating corporate power and creating the financial elite class. Think about it. Banks create money for free, lend it out, and collect interest on money that never existed until they typed it into a computer. Who do you think wins that game? Not the person working in the job market watching youth unemployment rise while automation replaces human labor. Not the farmer caught in the farming crisis unable to get fair prices. Not the young graduate drowning in student loans from the education crisis. The winners are those who understand this hidden mechanism and position themselves as lenders and asset owners rather than borrowers and wage earners. But here's where the house of cards starts wobbling. This entire system runs on one thing: confidence. The moment people lose faith, the moment too many try to withdraw their deposits simultaneously, the illusion collapses spectacularly. Bank runs, financial crises, market crashes. These aren't bugs in the system. They're features. They're what happens when reality briefly intrudes on the mass hallucination. And each time it happens, what's the solution? Government bailouts, central bank interventions, more money creation to paper over the cracks. The 2008 financial crisis, solved by creating trillions more in new money. The next recession? Same playbook. The economic uncertainty you feel isn't paranoia. It's your rational mind recognizing that something fundamentally unstable props up the entire global economy, and that economic collapse isn't a question of if, but when, unless you understand this system deeply enough to protect yourself from its inevitable breakdowns. So now you know the secret, the trick behind the curtain that most people live their entire lives without understanding. Fractional banking, the system that creates money from nothing, builds perpetual debt into the economy, and concentrates wealth upward while diluting everyone else's purchasing power. The question is, what are you going to do with this knowledge? Are you going to keep playing the game by their rules, storing your wealth in depreciating currency, borrowing money that was created out of thin air and paying real interest on it? Or are you going to fundamentally shift how you think about money, wealth, and financial security? Here's what I want you to ask yourself. How much of your wealth is in assets that hold real value versus claims on value that exist only as long as confidence holds? Do you understand why holding cash in a system designed for perpetual inflation is a losing strategy? Have you positioned yourself as a lender and asset owner, or are you purely on the borrower and wage earner side of this equation? Because the financial elite knows these answers. That's why they hold real estate, productive businesses, precious metals, assets that can't be created with a keystroke. They understand that in a fractional banking system, being on the asset side of the ledger is everything, while being on the liability side means you're the one getting diluted. This week, I challenge you to do one thing: audit your financial position through the lens of what you just learned. Look at where your wealth sits. Is it in a bank account earning 0.5% while real inflation runs at 8%? Is it in debt that you're paying interest on for money that never existed until you signed the loan? Start educating yourself on real assets, on ways to position yourself as a wealth owner rather than a wealth borrower. And if this video fundamentally changed how you see the money system, if it opened your eyes to the greatest financial trick in human history, then do me a favor. Subscribe to this channel right now and turn on those notifications. Because what I'm bringing you next goes even deeper into protecting yourself from the economic uncertainty built into this system, specific strategies to thrive while others struggle, and the moves you need to make before the next financial crisis exposes just how fragile this whole illusion really is. The system won't change, but your position in it absolutely can. The question is, will you take action, or will you keep playing the sucker in a rigged game? The choice is yours.